Hello, I'm Jeremy Fernandez. We're breaking into our schedule to bring you the outcome of the Reserve Bank Board's decision on interest rates. At its last two monthly meetings, the RBA has left the official cash rate unchanged at 4.25%. To discuss this, our business editor Peter Ryan is here. Peter, the consensus so far is that the RBA is going to leave things unchanged. Wait and see.
That's exactly it. Rates on hold at 4.25%. Just a few seconds ago, Jeremy, rates staying where they've been since December last year, when the Reserve Bank stepped in and cut rates in both November and December because of concerns about the situation in Europe, but also because they feel much more comfortable about where inflation is heading at the moment.
The last few weeks we've seen some economic data out pointing to much softer conditions here. Retail sales today seem to follow that tail as well.
That's right. Our retail sales were up a fairly anemic 0.2% in February, making 2% over the year. So the cautious consumer is alive and well, and add that in with concerns about the patchwork economy, states on the eastern seaboard doing it tough while the states of Western Australia and Queensland are booming. But just looking at some of the comments from the Reserve Bank that's come with the statement this afternoon, the Reserve Bank has made the point that it thinks it would be prudent to wait for official inflation data, the CPI, which is due out on the 24th of April. Now, if history is any judge, the Reserve Bank likes to see what the official inflation data will be, and so the expectations of a rate cut in May will probably hang most likely on that official reading on the 24th of April.
And so far inflation has been well under control, hasn't it?
Yes, and the Reserve Bank does say that it believes that inflation or underlying inflation will remain right in the middle of that 2 to 3% target zone over the next couple of years, and that's very important. But of course the other big indicator that they're keeping an eye on is the unemployment rate, which shows currently at 5.2%, low by world standards, but it did creep up in the last reading, so that could actually be a very important trigger along with inflation for the Reserve Bank to cut one more time this year, or perhaps two.
Now, with that rates announcement, are we seeing any reaction yet with the Australian dollar?
The Australian dollar is staying pretty steady. It was around about 104.3 US cents just before that decision hit. Now around about 104.12, so no movement much at all.